I think this is a really favorable time to own silver because of the structure of the market and because of the longer term trends and everything else you can think of about it. It's all pointing in the right direction. I think the people who've been stacking should continue to stack and hold for a long time. Don't think, okay, I doubled my money. I'm gonna cash out 2/3 of my holding. Don't do that in this market. There will be corrections. Central banks are the new whale in this market. They're starting to buy because they need to back their currency with something that's not treasury bills, and they're not very price sensitive. So they've just been throwing, newly created yuan or rupees or whatever at gold and just buying as much as they can, and that has kind of smoothed out.
Financial analyst John Rubino explains why silver may be entering one of its most favorable periods in decades. With central banks buying gold to back currencies and industrial demand for silver soaring, supply is tightening faster than ever. Countries like India have significantly increased silver imports, while mining output struggles to keep up. This imbalance could trigger a long-term upward trend, even potential shortages. Rubino emphasizes that while short-term corrections may come, the overall trajectory for precious metals remains strong. Investors holding physical silver, he suggests, should think long-term. This may be a generational opportunity. Like, share, and subscribe for more insights on silver, gold, and the future of sound money.
Yeah, backwardation in a market generally means that physical supplies are really tight. In other words, there are people who are buying it right now. They want it today. They don't want to wait in the futures market, in part because there's some macro thing driving, the need for the material, in this case silver, in the short run, or there's fear that the futures exchanges are going to go bust or default or something like that. And in this case, I think you've got both of those fears out there. For instance, India radically increased its silver buying in the last couple of quarters. They bought much more than they usually buy of silver. And then you've got a lot of industrial users who require silver to make what they're making. And if it looks like silver supplies are going to be tight, and while this is happening, silver's in deficit. The mines of the world aren't producing enough silver to cover demand. So we're having to eat into existing above ground stocks in order to satisfy all the demand. So, a lot of the companies that use silver in the products they make could very easily be saying, "Look, my CEO will kill me if we don't have enough silver to make next quarter's quotas, and so I'm just going to buy what I can in the open market right now." And so we stock up. Maybe we have a couple of quarters worth of metal there. So be it. And you might be seeing stuff like that out there, and that might be the reason for the backwardation. And if that's the case, that's phenomenally good for silver. If you've got some really big players out there who can't wait for 1 month in the futures market, then that's a sign that things are tighter than maybe they seem if you're just reading headlines out there. So, and that was always going to happen. Silver was always going to have a squeeze because as long as it's in shortage now, in other words, we're using above ground stocks to cover the deficit that exists in the market, there's always the danger that you just run out. Nobody knows how much extra silver is sitting around in the world that can be used to cover this deficit. And eventually, assuming there's a finite amount of silver out there, and eventually there will be a time when it starts to run out and people start panic buying. And I'm not saying this is that time, but I'm saying that when that happens, the beginning part of it will kind of look like what's happening right now, where you're in backwardation and the price is going up, and it's just a really favorable market for stackers who have a whole bunch of silver stashed away somewhere. So, nothing has mattered, not seasonality, not anything else, to precious metals lately. And part of that is that central banks are the new whale in this market. They're starting to buy because they need to back their currency with something that's not treasury bills, and they're not very price sensitive. So they've just been throwing, newly created yuan or rupees or whatever at gold and just buying as much as they can. And that has kind of smoothed out the trend for gold. You don't have this big seasonality kind of thing going on because the central banks are buying at whatever price. And now you've got a new whale coming in, which is the crypto guys, because companies like Tether are setting up uh, coins. All right, what's the term for that? Oh, tokens. Sorry, tokens. Yeah, where they go out and they buy gold, put it in a vault, and then they set up tokens that trade based on that gold on a blockchain. And so you've got basically electronic gold that you can trade, and so crypto money is starting to flow into gold too. And I think they really, based on, let's say they have a lot of Bitcoin, they're not very price sensitive either because they've the asset that they have been holding for most of the last 5 or 10 years has gone up by thousands of percent. And so let that new whale decide that they want access to gold via miners, and they start buying miners, then the old indicators of trading trading patterns in precious metals won't hold anymore, because you've got these guys who are not price sensitive and who have a lot of money and who want gold, and then presumably they want silver too. If you can set up a token with gold, you can do the same with silver. So that's another thing that makes trading based on history very hard in the precious metals market now, because there's just so many new players and so much macro stuff going on that it's really hard to look at history and draw any useful conclusions unless you fold all this other stuff in. Bull markets don't go in a straight line. They have spikes and then corrections and consolidations and all of that. And just the general trend is up overall when you zoom out and look at it over a long-term period. And so we could be getting close to a correction in precious metals right now, because it has been in a really exciting few months. And that might be a reason to do a few things with your mining stocks. For instance, I have a lot of gold and silver miners, and I've written some covered calls on them, and I sold 10% of a given position a few times to just kind of lighten up on things that have had really nice runs. But also, yes, it's different this time because this looks like the end of that fiat currency experiment. And in that case, you get the potential for a much longer run. So I would say if you're loaded up on physical, then just ride it. Make that be your generational wealth. Think of your pile of silver coins or gold coins or whatever as something that will bail your grandkids out 30 or 40 years from now when they really need it. So don't think of it as the thing you're trading in and out of at all. Now with your mining stocks, yeah, you look at a chart like you just showed, and that tells you to lighten up a little bit on some of your more successful positions, and that's reasonable. Taking a little money off the table in an equities position is frequently a really wise thing to do. So you can hold both of those ideas, that gold and silver are overbought right now, and that this time is different, and the ultimate upside is much higher than it was in past bull markets. You can hold both of those ideas in your mind and be right both ways, very possibly. So it just depends from there on what your risk tolerance is and everything, how much you want to take off the table. One of the really interesting things that complicates a portfolio of, say, precious metals miners right now, how to manage it, is that earnings season is coming up for the miners. And they have just had the best quarter, the third quarter of 2025, as far as the price of what they're selling. The price of gold and silver went up dramatically during that quarter. So they're going to report massively positive comparisons, both sequentially and year over year, over the next month and a half or so. And it's going to be this drumbeat of really good news in the mining space. So that makes it hard to take profits psychologically too, knowing that that's coming, because you're going to see, Newmont generate $1.5 billion in free cash flow. And what are they going to do with it? They'll probably buy up a bunch of the little stocks in your portfolio. Stuff like that is going to be kind of normal news, and it's going to be part of the speculative landscape in precious metals, because this kind of momentum, they've had two really good quarters already. This is going to be the third, and three dramatically upward sloping quarters in a row. Puts you on the radar screens of momentum traders. And it's been a long, long time since the precious metals miners were on screens like that, but they're going to be this time. They're going to be among the tiny handful of industries that are reporting stellar numbers right now. And so I think that's going to play a role in the near term, the trading arcs of a lot of these stocks, because you're going to see generalist money coming in, attracted by the momentum of earnings and maybe the stock prices.
Analyst John Rubino discusses how silver's supply shortage is reshaping the market. Physical demand is surging, from industrial users to nations like India buying record amounts, while global mining output lags behind. This imbalance has pushed the market into backwardation, a sign of tight supplies and urgency among big buyers. Meanwhile, central banks and even crypto-backed tokens are entering the precious metal space, making traditional trading patterns harder to predict. With limited above-ground reserves and rising global demand, silver may be entering a defining moment for investors and stackers alike. Let's get into the interview.
The tricky part of mining investing right now, because how much of that run is based on anticipation of the great earnings that the big miners are going to put up in the coming earnings season, and how much of that, how much of those earnings will be a surprise to non-precious metals oriented investors, a really pleasant surprise that gets them excited and causes them to start throwing generalist money at this market. There's no way to know. But I think that the generalist money thesis is valid. A lot of people who really don't care about mining and don't know how it works and don't know the history of it are going to look at these past few quarters numbers and go, man, that is serious upward momentum. I want to ride that trend while it exists. And there's so much more generalist money out there than there is specific precious metals oriented money, that it won't take a big percentage of the generalist money to have a big impact on these stocks. So I don't know. I mean, it's a great time operationally for these companies, which means their downside risk has to be limited by that. So I think the price contributes to it, because if you see the price going up like this, and you're somebody whose job it is to make sure there's enough silver on hand so General Dynamics can make as many missiles as the government wants or whatever, and you see the price going up like this, you start suffering from FOMO, fear of missing out, right? Because you know you're going to eventually have to buy X amount of silver, and you don't want to have to pay twice today's price for it. So maybe you just bite the bullet, pay today's price, and put security over profitability for a little while. And because the alternative, actually running out and not being able to make those missiles, that's more catastrophic than just overpaying briefly for a component that's not even that big of a deal per missile or per EV or per solar panel. So I think the price can cause backwardation, in other words, and that could be part of the story today. We had the nice run in gold and silver, and then they peaked, and then they started trending down again, or they plunged in 1980, and they trended down in 2012 through 2019 or so. In other words, they were kind of a normal market, bull market followed by a bust, followed by long consolidation. It might be very different this time, because if these currencies are in the process of failing, then it's hard to see what the actual upside limit is for gold and silver, because taking it to its logical extreme, if the dollar goes to zero, gold goes to infinity when priced in dollars. So that makes the precious metal story much more interesting and also, harder to analyze, because how do you know when to take profits when the currency that you're pricing your gold and silver in is falling potentially to zero? So I don't have an answer for how to trade this whole thing, but I think there's a decent chance that precious metals are an absolutely epic holding from here on until this thing resolves itself somehow. So I think the people who've been stacking should continue to stack and hold for a long time. Don't think, okay, I doubled my money, I'm gonna cash out 2/3 of my holding. Don't do that in this market. There will be corrections, and some of them will be painful, but think of them as a buy the dip opportunity until the whole currency thing sorts itself out.
John Rubino explains why the current market may mark the beginning of something historic for precious metals. As global currencies wobble and defense and tech industries rush to secure silver supplies, fear of missing out is driving immediate buying. This demand surge, paired with tightening supplies, could signal the next phase of a massive revaluation. While short-term corrections may come, long-term stackers see each dip as opportunity, not setback. In a world where fiat confidence fades, gold and silver stand firm as real wealth. Stay informed. Like, share, and subscribe for more insights.